The application of the CFA Institute Code of Ethics and Standards of Professional Conduct at Level 2 emphasizes the practical application of ethical principles in complex professional situations. Unlike introductory discussions that focus on definitions and requirements, Level 2 challenges candidates to analyze realistic scenarios involving competing interests, ambiguous facts, and multiple standards simultaneously. Investment professionals are expected to exercise sound judgment when evaluating conduct and determining appropriate actions. Ethical decision-making often requires balancing obligations to clients, employers, colleagues, regulators, and capital markets. The objective is not merely to identify violations, but to understand how ethical principles guide professional behavior and protect investor interests in challenging circumstances. A central theme of Level 2 applications is the identification and management of conflicts of interest. Professionals frequently encounter situations where personal incentives, compensation structures, business relationships, or employer expectations may conflict with client interests. The standards require members to prioritize client welfare, maintain independence and objectivity, and provide full and fair disclosure of conflicts. In many cases, disclosure alone may not be sufficient if the conflict could significantly impair professional judgment. Candidates must evaluate whether actions promote fairness, transparency, and fiduciary responsibility. Effective conflict management strengthens trust and helps ensure that investment decisions are based on objective analysis rather than personal gain. The application of standards related to material non-public information and market integrity is particularly important in Level 2 case analysis. Professionals may receive information through corporate contacts, industry experts, suppliers, consultants, or alternative data sources. Candidates must determine whether information is material, whether it is public, and whether its use would violate ethical standards. The mosaic theory often plays a key role in these analyses because it permits analysts to combine public information with non-material non-public information to form investment conclusions. However, professionals must remain vigilant to avoid trading on or disseminating material non-public information that could undermine market fairness and investor confidence. Level 2 scenarios frequently examine fiduciary duties and responsibilities to clients. Investment professionals must demonstrate loyalty, prudence, care, suitability, and fair dealing when managing client assets. Candidates are expected to evaluate whether recommendations are appropriate for specific client objectives, constraints, and risk tolerances. Ethical issues often arise when serving multiple clients with differing needs or when allocating investment opportunities among accounts. Fair treatment does not always require identical treatment, but it does require consistent and equitable procedures. These standards reinforce the principle that client interests must remain the primary consideration in all investment-related decisions and actions. Responsibilities to employers and professional competence are also major areas of focus. Candidates must understand how loyalty to employers interacts with broader ethical obligations to clients and market integrity. Scenarios may involve independent practice, additional compensation arrangements, supervisory responsibilities, research quality, or communications with clients. Supervisors must establish effective compliance systems and take reasonable steps to prevent violations. At the same time, investment recommendations must be supported by thorough analysis and a reasonable basis. Ethical professionalism requires diligence, competence, and transparency throughout the investment process. Failure to maintain these standards can expose clients, employers, and markets to significant risks. Ultimately, the Level 2 application of the code and standards emphasizes ethical reasoning rather than memorization. Candidates must carefully analyze facts, identify relevant standards, assess competing obligations, and determine the most appropriate course of action. Many scenarios involve multiple standards simultaneously, requiring an integrated approach to ethical decision-making. The overarching goal is to uphold the integrity of capital markets, protect investor interests, and maintain public confidence in the investment profession. By consistently applying ethical principles in complex situations, CFA charterholders demonstrate professionalism, reinforce fiduciary responsibilities, and contribute to fair, transparent, and efficient financial markets.